This is Kingdom Trust, and their speech today is their talk today is titled "Increasing Client Acquisition with IRAs." Let's welcome Kingdom Trust.
Thank you. Good afternoon, everybody. And so we're going to change direction here a little bit. We heard from some really fantastic, innovative portals and platforms today with their new technology that they're offering. What we're going to do is talk about the investor side of the equation, and more specifically, using retirement dollars to attract investors. By way of introduction, my name is Jim Jones. I'm Vice President of Business Development at Kingdom Trust. I am serve on the board of CIFRA, and am a co-chair of their investor committee, and I have truly pioneered self-directed IRAs in the crowdfunding space for the last 3 years. So today's presentation is going to be taking some of that experience and utilizing best practices to attract wealthy investors using retirement dollars through self-directed IRAs. So let's take a look at the IRA market, which most people may not be familiar with the actual size, but in the United States, all IRAs, almost 50 million IRAs in the United States worth approximately $6 trillion this year. But with the advent of baby boomers retiring at 10,000 a day, that market in 2016 is estimated to be almost $8 trillion. Self-directed IRAs have been around for the last 30 years. This is not something new. This is something that under IRS Code 4975 says an IRA can invest in literally anything. We know it as stocks, bonds, and mutual funds through brokerage firms. But through custodians, such as Kingdom Trust, your IRA can invest in just about anything. And so for the purposes of today's discussion, we can invest in just about any crowdfunding asset as long as it is an asset being an equity or debt structure. Ironically, self-directed IRAs make up only 1% to 2% of that 50 million IRA market. So I started to mention, what is a self-directed IRA? Under IRS Publication 590, it's just like any other IRA in terms of contributions, annual contributions, distributions, qualifications, rollovers. In the market in the last 30 years, in self-directed IRAs, alternative assets, privately traded securities, has been kind of a sleepy cottage industry growing about 5% a year. In the last 2 to 3 years, in private equity, private debt, crowdfunding, the industry has exploded 25 to 30%. So it's one of the fastest growing sectors of crowdfunding, and yet it's the most underutilized and unknown. So one last interesting point to make note, if this is your client base, you want to be considering using retirement dollars. For the average household income of over $200,000, they control 80% of the IRAs out there. The opportunity, we just talked about it. It's a 98% market opportunity, yet I wonder how many know about self-directed IRAs, or if you've heard about it, if you ask your CPA, your financial advisor, your attorney about these. Very few advisors know about them, so there's a huge opportunity here for education, and that's really the name of the game for us. Brokerage firms versus registered investment advisors. I talked to portals and platforms all day today. Kingdom Trust probably works with more portals and platforms than anybody in the crowdfunding space in terms of self-directed IRAs. And when looking for distribution, it's important to know that your traditional brokerage firms have they do not, have the incentive to be able to offer these, nor can they. And with registered investment advisors, they do have the opportunity to be compensated for advice, but again, it's a question of educating them how to do so. So in terms of education, we typically will talk about and include content on websites about understanding what self-directed IRAs are, what are permissible transactions, meaning if somebody's going to use their retirement funds to invest into a crowdfunding or peer-to-peer loan opportunity, they personally can't have more than 50% ownership within that actual entity that they're investing in. And then we'll talk about the account opening process in a second. So best practices when we talk operationally working with a portal or platform. Again, I'll go back to saying that having information and educational content on self-directed IRAs on the portal and platform website is most important. And this is one of the things that we've been working with to try and get the portals and platforms to do more of. Website technology, real online account opening and digital signatures, something that can be a real point of frustration for the investors coming on board. So you have a high net worth investor, they're used to a Merrill Lynch, Morgan Stanley experience, and now you're asking them to print out 50, 60 pages, make sure everything is signed, dated properly, have it mailed in, and then 5 days later get an account number. Doesn't work, okay? The second step of that is having to have an account transfer that can take 4, 5, 6 weeks. Doesn't work. There needs to be an online automated system. And the same is true with the actual investment direction. Crowdfund pricing, now that we are seeing some of our peers coming into this space, we've seen just about every kind of pricing imaginable. And it's so important to be able to offer one set price. What is the price for that asset or number of assets for the year? We see annual assets for holding the investment. We see quarterly asset fees for pricing. We see asset under management, so they charge on a percentage of value. We see transaction costs, transfer costs. These kind of hidden fees can kill a client and can kill a client experience. It's important to have these fees understood and right out front. Tracking and reporting. The portal or platform should know exactly when an account is opened, when the transfer is completed, and when the investment is made. Live client services. The idea that a trustee is going to work with a portal client and then have that client frustrated by getting voicemail is a killer. Live client services is a must. And then lastly, one of the other problems that we see of the frustrations out there is for those trustees that are not doing the investment assessment up front. That needs to be done so when the individual investors are ready to make that investment, that happens seamlessly. So pitfalls, really, again, just the reverse of that. Not having any educational content or FAQs we've seen is less client conversions that click onto that portion of the portal website and then leave without opening an account. Manually printing documents, empty shopping carts. Excessive retail fees, lost clients. Not having a designated contact both at the portal and the self-directed IRA custodian, also wasted time and duplicated efforts. Having no updates on account opening, funding, and investment is also lost investment opportunities and lost clients. And again, we talked about voicemail. Marketing best practices. It's important, obviously, to get any kind of press for the self-directed IRA providers about new relationships and what's new that they're offering. It's also important that their investors know they have the opportunity to use retirement funds to make these investments. Educational opportunities, webinars, podcasts, videos, white papers, articles. These are all best practices that the self-directed IRA providers should be working hand in hand with the portals and the platforms to get traction and make education worthwhile for them. And then lastly, education directly on the website. We talked about, again, understanding what a self-directed IRA is. Most people don't. What are permissible transactions? And again, the process of opening the account, funding it, and making investment directions. Marketing pitfalls, and I'm wrapping this up here for any questions to keep on time, but this is, I think, a really important distinction we tried to make up front. And I think the marketing pitfall is when that portal or platform is relying on the self-directed IRA client base to be their clients. So in other words, they come to us and say, well, geez, how many clients do you have? and we tell them our client base, and they think, well, okay, there's the low-hanging fruit. These are self-directed IRA investors. They already know the drill. But the odds are they may be mom-and-pop real estate investors. They may be precious metal holders. They may hold tax lien certificates and promissory notes. They may not know your world. And I think for those portals and platforms, and I know there's one out there that signed up 8 to 10 of us and are hoping, and their business plan is wishing that their business is going to come from the self-directed IRA providers. It's not going to happen. Can they get clients from the providers? Yes. Do they? Yes, absolutely. Are we allowed to? Yes, we're allowed to educate our client database about opportunities out there. And we do that because it's our job to educate clients to investment opportunities out there, especially in this new asset class. But what we cannot do is endorse, promote, or solicit. So that's really an important distinction to know. And once again, the business model as such for self-directed IRA providers is that they make their annual fees on the assets. So selling an additional asset doesn't necessarily equate to a business model for a provider. So it's really important when thinking about offering retirement funds to portals and platforms that you understand the logistics. So again, summary, the self-directed IRA market is huge. With 50 million IRAs, and we've tapped 1% to 2% of that, it is literally an untapped market. The biggest challenge, again, is education, education, and education. Equally as important is to be able to make sure you are not working with a manual process. That process should be automated and online. And lastly, understanding that acquiring new investors is really a joint effort and that it takes a lot of work. Questions?
I have a question.
Please.
So I am a user of a self-directed lending club IRA.
Yes.
And can't believe that I'm earning this to some degree, have some sort of tax deferred or tax free, or what the phrasing is.
Yes.
When I try to communicate this to my friends, oftentimes I don't know what language to use, and so is this kind of the barrier of education that you're talking about? It's such a simple product, but it's difficult for me to communicate this to my, my friend who is he's a bartender.
Sure.
But he's 38. He needs to save for retirement. What an opportunity to do it in a IRA that's self-directed. So could you talk about that?
Yeah, thank you. Great question. And that's what we do every day, is really educating both the investor side, but also educating the advisors that these kind of opportunities exist. So when self-directed IRA, or I should say when IRAs were created back in 1975 under Congress, it was done so in order to offset what would be the forthcoming end of pensions. So banks, brokerage firms, and insurance companies that were in the business smartly shifted over into the IRA space. Well, at that same time, self-directed IRAs were created under IRS Code 4975 that said, hey, you don't have to invest in stocks, bonds, and mutual funds. You can invest in real estate and promissory notes and precious metals and private equity and private debt. But the majority of people, 99% of them, have money with brokerage firms that are selling publicly traded securities, stocks, bonds, mutual funds, and ETFs. There is no advisor market at this point that exists for saying, hey, you can invest your IRA in this or in that. So when we say self-directed IRA, that's where that term comes from. The IRA holders are directing us, the custodian, to invest in these alternative asset classes. So one of our major challenges and charges is trying to work with the registered investment advisors to say, hey, you can have your clients invest in these new alternative assets. And we're seeing alternative assets growing 10, 15, 20% in the last several years. But again, with 1% of that market known, it's an issue of education. And every day I'm talking to financial planners, advisors, CPAs, attorneys, trying to let them know that this is an option for them.
One last question. Anyone got a question? In 1 minute, can you summarize how you and I talked earlier about how technology is reducing cost?
Yes.
In regard to, it used to cost so much to have somebody manage your account. Like, for instance, Lending Club, when they first opened their IRA, there was a fee attached to it, if I remember it correctly. So anyway, I just think that's a really amazing thing about what's going on here today.
Well, the technology efficiencies have made it much easier to do business, but it's also driven down the costs of doing business, and the costs have come down considerably.
Cool.
And in many cases, Lending Club and Prosper, for instance, are covering the cost of the annual fees for the RA. So they're literally free for the investor.
Let's thank Mr. Jones today.
Thank you.